Welcome to Be the Boss of Your Money. This is my live stream. It's your post-market show about the stock market, investing, personal finance, borrowing, all of those important things, paying for college, estate planning. If it has to do with money, we're going to talk about it here. The name of the game is to help you take control of your money. Money control. The more you know, the more you're likely to do smart things with your money, and the more likely you are to not do dumb things with your money. So let's get into it, because positives abound. And I think we've gotten so overly negative and caught up in the negative scenarios that we're forgetting the positives. And there are some big positives that I want to address today. They're too important to ignore. And you need to know about these positives, because these are the things that could keep you involved in the market, keep you sticking to your portfolio that you so carefully crafted and worked so hard to create. And now you're just going to chuck it because you could be in a recession or in a bear market. You knew these were going to happen. You knew these were coming. So let's get through it. We've got some important things to talk about while you're watching. If you have any questions, please hit me up in the comments. I love hearing from you. It's the best part about this show. I love hearing from you. And if you have any words of wisdom, words of encouragement, leave those in the comments too. I'll see those. I love to see that. And if you want to leave a thumbs up, a heart, an applause, a wow reaction, depending on which platform you're watching on, definitely do that too. I'll see who's out there, and it helps spread the good word about the things that we're doing here. Here we go. Thank you so much for joining me. My name is Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. It's all about personal finance, investing, borrowing, etc. If it has to do with money, we want to talk about it here. We want to make you smarter about your money. We want to help you take control of your money. We want you to be the boss of every dollar you have. You're the boss. Act like the boss. Okay? Your money's not the boss of you. And that can happen pretty easily when things spiral out of control. It happens. So we can't let that happen. And if things are spiraling out of control, let's pull you back in and figure a few things out. I want to talk to you about the stock market. We talk about the stock market a lot. It's fun. It's exciting. We're almost all in it. It affects us. It affects everybody. It even has something to do with the wealth effect, meaning when investors, whether if you are an investor or not, when other investors, when people are feeling bullish, good, positive about their net worth, they are apt to spend more money. It's called a wealth effect. They spend more money. It's good for the economy. Listen, when you stop spending your money and you decide to save, okay, that's a good thing for you. But when everybody does it, it's a bad thing. It's what causes a recession. People pull back, either because they want to spend less money or they have to spend less money. That's why inflation's a problem. You spend the same amount of money, but buy fewer things. You have to decide, well, I was going to buy these 10 items at the supermarket. Maybe I can only buy 7 or 8 of them now. Which one do I not spend money on? Personally, I hope we never spend money again on Sunny D. I can't stand that stuff, but my kids like to buy it sometimes, and it's gross. But that's my personal finance talking about that, right? So let's talk about today the positives. The Dow is up after being down over 300. We had a pretty positive day, a very positive day yesterday. We had the kind of day yesterday that the skeptic in all of us would say, this is a head fake. It's just another bear market rally. You know, when the market rebounds hard from short-term oversold conditions, people go bargain hunting in the market, stocks go up, and then other people think, this is it. We're out of the woods. We need to do some buying. The market goes up a little bit more, sucks people in, and then it goes down again and just crushes you It punishes you for buying the dip. That's what bear markets do. They mess with your head. Just like bull markets mess with your head. No matter what the news is in a bull market, it's always interpreted as good. Anything is good. Stocks go up. Everything is good. The news that comes out, it's always interpreted with a positive slant to justify the market going higher, stocks going up, always. And it starts to make people think that they're smart. It validates people's it wrongly validates people's intelligence. Like markets going up because it's where money goes, interest rates are low, there's no place to put it. And seniors are looking for dividends, so they're buying dividend stocks. There's lots of reasons why the market goes up. But it messes with your head because people start to think that they must be really smart. They must know how this works, how the scheme works. And they're really good. And then people buy meme stocks, pandemic stocks, and they keep going up. And it validates people's bad decisions. That's what it does. That's what a bull market does. A bear market messes with your head because it makes you think, I should have sold. I could have sold. Is it too late to get out? It's over. It's a bear market. It's a recession. As if that actually means it's lights out for the market permanently. And whatever you have left in the stock market is all you're ever going to have for the rest of your life. So you better protect it and sell everything and go to cash. No, that's short-term thinking. It's panic. That's what that is, right? We don't panic. Panic is not a strategy. And my firm is called Client First Strategy, not panic strategy, right? Not client panic. It's client first. I should use that more often, that line. That was pretty cool. So let's talk about some of the good things that are taking place in stock market land. Did you know that I used to say this a lot, and I stopped saying it for a while, but I have to start saying it again. A down market is your friend. If you're a viewer of my live stream, you've heard me say this before. A down market is your friend. Because you're accumulating, you're buying investments. You get them cheaper. You get them at lower prices. That's the name of the game. Ultimately, the stock market has always recovered. So people have this sense of lights out, this sense of doomsday scenario. Well, listen, we could only have a doomsday scenario once. And if we have a doomsday scenario, then, how you're doing in the stock market is the least of your problems. So we don't even have to worry about that. What we do need to, worry about is not the external factors, not the bear market, not the recession, not a war in Europe. Okay? What we need to worry about is not doing the things that we can't control. There are a lot of things you can do to take control of your personal finance situation, things that have nothing to do with outside forces, like continuing to invest in your 401k plan month in, month out, even though the stock market's going down. Do you know every time you do that, you're buying more shares of the same securities? You're getting better prices. A down market is your friend, and every time someone has bought in a recession in a down market, they've come out better for it. Prove me wrong. Now, I know what you're saying. Well, I bought this stock and it went down and never came back up. So let's talk about two different kinds of investors because it's really important. There are those who are investing in asset classes, like, for example, they're using index funds or mutual funds or actively managed mutual funds for stock market exposure. They just want exposure to the asset class. Now, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index, like an index fund. All right. And that's to give you the broad exposure. I just want to buy stocks in general. I just want to bet on corporate America over the long term. And then there are those who are investing in individual stocks. And I have nothing against that. It's not against the law. I, too, invest in individual stocks as well as exchange traded funds, index funds, right? By the way, an exchange traded fund invests, it's a fund. It could be an index fund or an actively traded fund, actively managed fund. It's a fund. I do both. But for the individual stock investor, and I'm talking about those who jumped into Roku at all time highs or much higher prices, DoorDash, lots of other stocks that we talk about, Peloton. For you, it's different. You purchased a specific situation, not a general asset class. You picked a specific situation that could suffer from a number of risks: risk of obsolescence, risk of permanent loss, risk of going out of business, leverage risk. There's all kinds of risks that you take when you get into individual stocks because you're not diversified. Now, diversification does not mean your account won't go down in a down market. Okay. But it is a way to help protect yourself. That's what we say. Diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market like the one we're in now. But it doesn't mean it doesn't work. It could help your portfolio recover faster because your portfolio probably went down less than the overall market. That is a big benefit of diversification. Plus, when it comes to individual investing, if you're overly concentrated in one stock and that stock goes belly up, well, you have a big permanent loss. But if you invest in a lot of stocks, you can handle one or two or three stocks going bankrupt, out of business, disappearing. And the others will more than compensate you for it, or the others are expected or hoped. I can't say will, but they are hoped to compensate you for the losses. So now that I've given you a little bit of background about investing and how it works, let's talk about some of the positives in the market. Now, just to make sure, I do believe I ran the intro. Yes. So let's talk about some of the positives. Okay. Did I run the intro? Just in case, I'll run it now. All right, I just like the intro, so I ran it again. Okay, big deal. Don't hate me. Don't throw rocks at me. And I haven't seen your questions yet, so while you're watching this, throw me a question, throw me a curveball, try to trick me. Go ahead, I dare you to. All right, try to throw one by me that I can't answer. All right, we're talking about money, investments, that sort of thing. Okay, just keep it onto that subject, okay? Because I could see some of you wise ass friends out there throwing some pretty odd questions at me that might not be appropriate for somebody in a regulated industry such as mine. Okay. All right. Down market is your friend. Let's accentuate the positives. First of all, yesterday, we had a pretty good day in the market. Okay. So let's take a look at what happened today, because this goes hand in hand with accentuating the positives. Okay. Let's do share screen. All right. First positive, the Dow is up today. Okay, so whenever the market's up, you could say it's a positive day. I don't get overly excited. I think you know that by now about me. I don't get excited whether or not 14 children, one teacher. Oh my God, another disaster in an elementary school. I'm sorry I saw that just now. Keith is out there. I dare you to call the bottom. Oh, just because you dare me to, I want to call the bottom. I want to call the bottom. Big bottom. There's a song that comes to mind from the movie Spinal Tap. Do you remember that, Keith? Spinal Tap. It's like that 80s movie about a spoof rock band. That was actually a pretty funny movie. First positive, the Dow is up 48 points after being up over 600 points yesterday. Now, I always tell you, I don't really like those big up days when the Dow is up 500, 600, 800 points. I don't like those because the rallies, they always get repealed. They're up too much. People take profits. They get repealed right away. I like a nice small gain in the market because I think it's stickier. I think it's more solid. It's less likely to get repealed. But the reason only 48 points is a positive is because it follows yesterday's 600 point plus day in the Dow. We carried through, we followed through. We didn't just go up 600 points yesterday and go down 5 or 600 points today. The rally held. And this is a major index, the Dow Jones Industrial Average. It's a major average. Major. It's so major, I think it's better than average, even though it's called the Dow Jones Industrial Average. But up 48, it held in spite of the NASDAQ, as you could see, okay, down 270 points. So the NASDAQ went down today even more than went up yesterday. And there are reasons for that. We'll take a look at that. But basically, I'll tell you now, Snapchat, the stock, the company, came out and said things have really slowed down. A lot of macro challenges. Advertising is way down. So therefore, Snap got smacked. Google got smacked because paid for search. Facebook, also known as Meta, got smashed. So the whole NASDAQ came down. And you know what? If this news came out 2 or 3 weeks ago, we probably would have had a much more substantially down day in the NASDAQ than we did today. And all the other averages would have been dragged down a lot, not just a little or up a little, but just crushed. It would have been a horrible day. But I think this goes to show you that maybe stocks are starting to find a bottom. Not all stocks, obviously. The NASDAQ was down, and Google, for example, Alphabet hit a year low today. Amazon hit a year low today. It's not every day that we talk about the stock of Amazon and the two words year low in the same sentence, let alone the same paragraph on the same day. We never talk about that, but that's where we are. But the Dow still held up. Stocks went up. Investors are differentiating between tech and healthcare and industrials and financials, as opposed to just saying, I'm blowing out of stocks altogether. That is a huge positive. All right. So score one for the people who are going to remain bullish and get through this bear market that we're in. All right. What's another one? Another one I want to show you is the stock of Zoom. I want to punch up a quote. Zoom up 5 today. In spite of bad news in tech land, in spite of the NASDAQ going down, in spite of a lot of things, and only down 6 cents after being up over $5 in the regular session. This is a positive. Zoom is a poster child of the pandemic era stocks. Zoom is the stock. If I can say there is one stock, if I had to pick one stock that could truly define the pandemic stock rally, screen stock rally, it would have to be Zoom. Zoom is way the hell down from its all-time high, but it's up nicely from its all-time low. Up a lot today. Better than expected earnings. And it held. It held all day. Stock has held like a champ. And that is something to celebrate. What else is a positive? Let's take a look at the bond market. Let's take a look. Short-term yields went down a little bit, even though the Fed is expected to raise short-term rates. But look at the 10-year, 2.76. Wasn't that just 3.1%? And going higher? Going to go to 3.25 or 3.5. Those are like the magic levels that we're going to totally put the kibosh on the stock market, just really kill everything. All of a sudden, people are buying bonds when the market is weak. The Nasdaq was very weak today. S&P was off a little bit. S&P wasn't off much. We'll get back to that in a second. But bond yields went down. This whole year, one of the biggest problems was diversification wasn't helping you. Stocks were going down and bonds were going down. Usually when stocks go down, bonds go up. And if bonds go down, then the stocks would go up. But that relationship was broken this year until now. Now stocks are weak and bonds are strong, which means interest rates, yields are going lower. That is a positive, in my opinion, a positive development that we're getting back to these normal correlations between stocks and bonds. I'll give you one more positive. S&P 500 only down 0.81%. You know, when you see stocks hit year lows like Amazon and Meta, and you see the news from Snapchat, and the S&P goes down less than 1% because there were enough stocks to help hold it up, that's a huge positive. I think it's a bigger positive than it's getting credit, than it's being given. And I think that is going to carry the day. I think we're going to talk about this in financial media over the next couple of days. The VIX is up a little bit. That's okay. It's still under 30. We need to see the VIX at 20 to really have a confirmation of a solid rally. All right. And let's take a look while we're here at crypto. Crypto is up a drop. Okay. At least it didn't go down. It is a speculative asset. And it did break trend with the Nasdaq. Nasdaq was down a lot, but crypto actually went up. So maybe, that correlation is not as strong anymore. All right. But I want to show you this. The Dow 30. McDonald's was up over $6. Verizon up over $1. IBM up over $2. Coke up over $1. Procter & Gamble was up. JP Morgan was up. After being up yesterday, JP Morgan was up, $7 yesterday or so, a big day yesterday. And it continued to rally today. Walmart bouncing back a little bit. Amgen, United Health up over 5. Do you see what I'm seeing here? Stocks are up. Not every one of them, but enough. The market is starting to differentiate between different kinds of stocks, and different kinds of stocks are sending you a message. There's lots of messages. We won't get into every one of them, but they're worth exploring. Industrials, Northrop Grumman, Lockheed, Waste Management, 3M, Caterpillar, Deere was down a lot, recovered yesterday, recovered more today. FedEx. FedEx is down from 319 to almost its low of 192. Could it be that FedEx is sending you a signal that energy prices may have peaked? Interest rates are down a little bit. Maybe people have become too negative. Okay. Let's take a look at this. So this is the most important list of the day. Okay. Norwegian, these stocks roll down. These stocks are the reopening plays that I used to talk about like every single day in my live stream during 2020 and like the first half of 2021. But the reopening stocks got crushed today. Norwegian, Carnival Cruise, Royal Caribbean, airlines like UAL, Delta, Planet Fitness down, Southwest down, Cinemark Holdings, Marriott was down $5. They're all down. My entire list of reopening stocks. See, I call it reopening stocks. You see the name there, reopening stocks? See that? Reopening stocks. The whole list is down. Why? Well, because people are worried about monkeypox. Now, maybe people will cancel flights, not go to Disney, not stay in a Marriott hotel. People, I don't hear a lot of people talking about monkeypox, but with rising COVID cases and this weird freaking virus called monkeypox, it's mildly scary, and it's scary enough to knock down reopening plays. So that's a big thing today. In any event, there were plenty of stocks that were up. I'll just give you an example. The sector ETFs. Okay. Utilities are up. Consumer staples are up. Real estate, energy. Healthcare, we're up. Industrials were off very modestly. I mean, barely off. Same with financials. Same. Uh, Building materials are off a little bit more. Tech was off. Obviously, tech was off. But the XLK, this is the big ETF that tracks the tech sector, was only off 1.48% versus a 2% plus down day in the NASDAQ. I'll sum it up. All of a sudden, investors are getting more discriminating. And instead of just blowing out of everything, they're starting to delineate the good from the bad, different kinds of stocks and bonds. Remember, a down market is your friend. Positives abound. And it's not all doom and gloom. And we shall get through this like we've gotten through every previous bear market and recession. Thank you so much for watching. Hope you enjoyed the show, and I will be back tomorrow. Have a very good night.